A fundamental breakout regarding the yen. We were earlier talking about that the Japanese government was considering to have lockdown in 11 Japanese provinces. This, of course, is risk adverse, will cause a rise into the value of the yen against the United States dollar, and in general will cause, of course, a rise into the value of the yen. Let's take a look at today's trade management chart right away. This is the 1 hour chart. We are definitely negative. We have a continuous bear trend down. Remember that technical picture on the daily chart, on the 4 hour chart. I believe that's it. We're looking at a correction into wave 4C. That wave 4C should take us all the way down to level 1. This is that 4C that we're talking about. Any 4C should be a 5-wave swing. Any C should be a 5-wave swing. So we will have 2 chances to enter short in a level 3. That level 3 should take you at least to 154, maybe even over here 154.10. There's going to be a bounce maybe at 153.27, and then we have a correction 4. We showed that again at 156. There's going to be a wave 5 that takes you down to level 1. This is happening right now, but the levels have become elevated because of the current fundamental breakout, even though sterling is really moving very strongly down and is expected to go down against the dollar all the way down to 1.34. We just checked it. So maybe there's going to be a correction in sterling higher, but we will retain the position. So remember, this is going to be a 5-wave swing all the way down to over here. It's showing at first level 1 is at 153. All right, so there is a 1 2, there is an internal 1 2 3 4, there was a 3. Market is doing that. 4 should always reject below level 1. We take this down all the way to 154.60 before we're expecting to see a wave 5 and then higher degree correction, and that becomes an internal wave 3, and then we move lower to, if the momentum permits, all the way to 153.70s and 152. Let's take a look. So that's what we're actually seeing. It is the same as on our analysis. There's a 1 2, there's a 3, this is a wave 4. It has rejected at level 1 as expected, so this is either now a wave 5 or that was just probably this is now a wave 5. We are looking at taking targets at 155. We were short, of course, yesterday at 156.70 and these kind of levels. We could consider to take targets at 155.50 now or hold. Let's take a look at the 1 hour. Take a look at that wave 5. We're gonna be shorting, projecting wave 3 into this, out of this. We're now looking into that 5 in white, and this is gonna be there because we have negative momentum on the 15 and negative momentum on the 1 hour. You find we have very strong negative momentum on that 15-minute chart. We have, of course, very strong negative momentum on that 1 hour chart. We'll not go out of the market until momentum on the 15 minutes begins to do a high degree correction. It's as simple as that. We are momentum traders foremost and go with the flow. All right, so we're looking at this wave here. It's going to extend. This is a wave 4. It's going to extend into wave 5. You are seeing leg 3 into this wave 5. There's a 1 2, there is a 3. So I'm using projections right from the top of 2 all the way down to the bottom of that wave 3. Best entry is going to be back to 156.30. If you're not already in the market, you'd want to short 153.30, 156, I'm sorry, 156.30, 156.15. If we are already in the market, we would just hold our trades all the way down to 154.70, looking at that level, and 154.20. This is where we expect level 5 to finish. 161.8, 154.20, 154.60, these levels here. Now I know it gets confusing because according to our study or our projections, we should be getting 2 swings. Yes, we have a 3 and a 5, and we don't want to get caught in between with a 4 that suddenly spikes higher and takes us out on our profits, deprives us of the running profits that we have. All right, but we don't have to be confused. We don't have to predict where that wave 3 is going to end. This wave 3 is going to end once we get negative momentum on the 15-minute chart. Once we get higher degree, positive momentum on the 15-minute chart. Once we really get higher degree, what looks like a higher degree 3 on the 15-minute chart, while we are beginning to actually correct or just show a bit of zero momentum on the 1 hour. This is the 1 hour chart. We are of course negative, all right, and we expect that this is going to continue so long as the feed on the 15 minutes is negative. Once we get reversal on that 15-minute chart, really, then yes, we can close out and consider we're going to have a higher degree correction, and that wave 5 is finished. We go back to that label here, go back to these labels. There's a 1, 2, there's a 3 and a 4. That 5 will finish somewhere, and then we know that that is first leg 3 or leg 1. We do projections right from the market bottom all the way to the market top and re-enter at higher levels, 156.7 down. Okay, so we are buying into yen strengths by shorting sterling against the yen. Now we are actually, this should be in favor of our direction. Yen should appreciate on what the Japanese government is intending to do in terms of long down, and also sterling is weakening. You can see sterling is weakening against the dollar, so we'd expect to get better levels for the current trade, at least 154.6. And even then, on a rebound, we are just seeing a wave 3 at that neckline, where we would reshort into a wave 5, as already outlined in the analysis. So to recap, if you're already short, you want to take profits at earliest profits at 154.7. If you're not yet into the market, you would consider to join at 154.3, this level here, and 156. I'm sorry, I keep mixing up the numbers. 156.3 and 156.15. The stop is 157.6.